Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have back the CEO, Brian McKinney of ICEsoft Technologies, which trades on the CSE under the symbol ISFT. The company is trading at 5 cents with roughly 112 million shares outstanding, or about a $5.6 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks so much, Trevor. Great to have Brian back. You were last on about 5 months ago, and we've been tracking the company since then, and a number of things have happened since then. So we're happy to have you back on board to update us. But before we get into the updates, Brian, why don't you tell us all about ICEsoft and refresh everybody's memory as far as what you guys do?
Perfect. Thank you both very much for having me. I certainly appreciate the opportunity to come back. We've had a busy summer, as we'll talk about, and some great news and great momentum. Little bit of an introduction for ICEsoft. So ICEsoft, we're based in Canada. Offices in Calgary is our headquarters. We have offices in Victoria. We've been around for a number of years. We went public a couple of years ago. We launched with our about 2 years ago, we launched our product Buoyant Alert, which is a community-based notification service. And since launch, we are now over about 300 communities served across Canada, and tends to be highly differentiated. We certainly saw a lot of use this summer with the BC wildfires in terms of what was going on. For those of you who aren't familiar with Buoyant, it's a multi-purpose notification service. Our clients use it both for day-to-day communications as well as emergencies. So about 80% of our communities are using it on a weekly or bi-weekly basis for letting people know about service interruptions in their community, that sort of thing. The alerts are a little bit different. They tend to be customized to the end user's personal circumstances. And so, rather than getting a generic kind of text-based email, you'll get more precise ones. So the gas leak is located 500 meters south of your child's school. Here are the turn-by-turn instructions to get to, the pickup location for them. We find that drives a much higher level of community engagement and enrollment. The other thing that we do is slightly different is we're really targeting small to medium-sized communities and regional governments. We feel that's where we can really differentiate. Across North America, communities with populations of less than 50,000 make up 55% of the population in North America, and we feel like that's a really underserviced segment of the market. One last slide here on the thing we mentioned, the difference. Lots of information around the mapping. You'll see we do a lot of personalization, distance and direction to incidents, important safety information, personalized evacuation routes, that sort of thing. And so when that all comes together, that tends to deliver a higher value package to the end users and within those communities. So that's kind of it from the overview.
Perfect. Thanks so much, Brian. We saw a number of wildfires this year. I mean, this something that was pretty prevalent in Western Canada. I sort of envision your business a little bit like selling, burglar alarms after there's been a break in somebody's house or neighborhood. Yeah. Tell us what's happened over the last year, and what sort of has the number of wildfires that we saw in Western Canada, what has that done for your business?
So wildfire season kind of started late June, and it to your point, it draws eyes to the business in terms of what we did. We always had a strong presence in BC. The wildfire season this year certainly drove attention and a lot of customers our way. We got tremendous referrals from existing clients based on the capability and support of the system. We went from approximately 25% of municipalities in BC covered in April to over 40% of municipalities in British Columbia are now serviced by Buoyant Alert. We issued over 320 evacuation orders and evacuation alerts over the summer, which was a huge number. You think about it, it's 4 a day in terms of what we're doing. And, you know, that translated into about 80% of all alerts that were issued in British Columbia came from the Buoyant Alert system this past summer. And so that you know, for better, for worse, that got us tremendous exposure across the province. It drove up sales. The other thing that we did, and we made a conscious decision of this at the beginning of the year, was we extended, you know, a lot of our clients were in the middle of staffing changes. So some staff had left, sometimes they were caught off guard. When they decide to onboard in the middle of the season with Buoyant Alert, they're dealing with fires. They don't have time to train. So we changed our support profile for the summer, basically acting as an extension of their own internal staff. And we made a conscious decision that we were not going to charge a premium service for that. And, you know, this is just a way to kind of contribute our efforts to the situation that was at hand. And, you know, I think, you know, when we look at our numbers, we're looking at 100% year-over-year renewal rate now on all our subscribers for the Buoyant Alert service. And I think, you know, people come to us for our feature set. You know, we're unique. We deliver extraordinary value. They stay with us because of our support is what it boils down to. And I think it's an indication of what we managed to deliver this summer.
And remind us how you guys get paid. Like when a community takes on your service, how do you get paid for it?
So we get paid upfront for a year or 2 years or 3 years. It's a prepaid subscription kind of relationship on that one. It is a software as a service product. So, you know, we ultimately have the keys to the kingdom on that sense if people don't opt to pay in. We get paid directly from the regional district or the province or the community municipality. So the end users don't actually have to pay anything to register. We typically bill our communities based on their population sizes. And our target for the year is about 43 cents per resident per year in terms of our addressable population base. Right now, we're sitting at about 38, 39 cents. So we got a little ways to go. We're up from the 30 cent per year number that we had at the end of 2020. So, you know, we've kind of bumped that value recovery up by a good 30%.
And do you keep track of how many residents you have under the system?
Yeah, we do. So right now we have an addressable reach of about 1.3 million addressable users that are in there. That's across 300 or so municipalities across Canada and North America on that sense.
Gotcha. And is it your responsibility to try to increase the number of people on, or is that really a community effort to do that?
We both do it. We both focus on it. We provide support and best practices, instructing them and advising them as to how to do it. Two things that jumped out at us is certainly activity drives registration. So one of the things we've noticed is that communities that tend to use the service on a more frequent basis for day-to-day activities like water mains being turned off or street closure construction notices, they are recognizing an enrollment rate that is 5 to 10 times greater than those communities that are just using it for emergency notification services.
Yeah.
Events drive it. If we looked at the Thompson Nicola Regional District, so this is Kamloops Merritt in central BC. Prior to fire season, they probably had about 4,000 people enrolled. Within 2 weeks, that had jumped up to 30,000 with the fire. So, it evidenced our ability to scale quite well. But more importantly, it shows what these kind of events do and the demand for information during them.
Now, since we last spoke, a number of sort of events have happened, or you know, news events. You got your first U.S. community, is that correct?
Yeah, we got several of them. I think we're about 9 or 10 now. And you know, we started the push kind of in the January timeframe into the US. Like Canada, it takes a while to kind of get that first traction, and we're seeing it mimic what we're doing in Canada almost to a T. What tends to happen is we kind of get an anchor location, and then very quickly thereafter they talk about it, and we start getting these satellite communities around the first one. We start seeing referrals starting to take over. So the anchor points we've got right now are in Texas, just outside of Austin, so satellite communities. We have a bunch that are clustered together now in Colorado and emerging in New York.
And the other thing I noticed, and this is a recent press release, but 36 new communities in Q3, I believe, which is up 100% from how many you got in Q2. What's driving that?
Part of that was the referrals from the fire,
Mm-hmm.
and in terms of what we were doing. The rest of it is people are just starting to emerge gradually, you know, from COVID, and we always said that they were going to re-engage. And that is in fact what's happening. We're just seeing more and more of that coming in. We're doing more new Buoyant sales in a month than what we've ever done in any prior quarter. So, you know, put it in perspective, we're seeing a tripling of new Buoyant sales, you know, over you know, quarter over quarter kind of thing in terms of what we're seeing, which has been great.
And do you see that? Can you maintain that sort of ability, or do you think it's a bit of a one-off right now?
I think there is seasonality to it, especially around budget cycles. So whether we see that pace continue in through Q4, it's looking good right now, but you can easily convince yourself that, you know, that might get pushed off to the year, depending on what a community's budget cycle might be on that one. So, but they're certainly in the pipeline. We're seeing a conversion of about 66% of everybody that we give a demo to. So, you know, if we give a demo to 3 people, we're seeing 2 of them converting over to paying clients. So certainly have a decent handle on our on those kinds of metrics. So
and it gives a sense of your sales force. Like if you're obviously, if you're getting that kind of high you know, success rate, you want to just hire as many salespeople as you can.
Yeah, we take that a little bit more cautiously. You know, we have probably 3 of us that are doing selling, a couple marketing people, a couple of inside sales people that are doing the screening for us and pulling them in. And then we have a support team that steps up after the deal's been closed to facilitate training and internal launch. But yeah, you know, what we want to do, our objective, my objective is I think it's really important to get to a positive cash flow generating from this business effort here. We're not quite there yet, but you know, if we can maintain these trends, we're going to be there pretty soon.
I mean, that was going to be my next question, is how do we sort of, what metrics should we look at to sort of see when you're going to be close to break even? Like, is it how many, you know, you're sitting on 300 communities now, is it 400 communities, or is it more understanding sort of the number of people that you've got under the service?
Yeah, a lot of it will be the number of people that we have under the service is ultimately more important than the communities.
Sure.
We do report communities as a key performance indicator, especially as we start to emerge out of COVID. You know, it's a good sign there. Our target for the year was 300. It looks like we're going to be, you know, somewhat maybe close to 320 coming out of that. I think by the time we start getting to, you know, 450, we should starting to be looking at kind of a break even kind of a model there. Some things that we've noticed with our other markets, the US is certainly a richer market. We're seeing a higher rate of return per resident in the US than we are in Canada. The communities tend to be a little bit larger, which is helping. The one that really has us interested is the enterprise market. We're seeing, a 10x return in terms of dollars per employee that we're recovering versus dollars per resident. And that can be quite attractive. We'll get more money out of an enterprise with 1,000 employees than we would with a community of 120,000, for example.
Why don't you talk a bit more about what you mean by that? Like when you're dealing with a corporate enterprise, what are you providing for them?
So it kind of falls into two folds. Usually it is we have some corporate clients where it's strictly alerting their employees. So violence in the workplace, don't come into work today because of weather, the office is closed, the kind of traditional employee communications that they can handle in a broadcast fashion, in that sense. Then the other side of the coin are those kinds of businesses that have more of a B2C outreach. So if you think property management, where a large apartment block is not that different than maybe a small city in terms of the kinds of communications that you want to do. Utility companies, so gas, oil, water distribution, rural water utilities, that sort of thing, where they have that hybrid. They also have employees that are off on their own sometimes and require a little bit of oversight that helps them.
Very interesting. The other thing I noticed, you guys went out to raise some money. You closed the financing. I think it was 1.5 or 1.6 million. But it was with the Shen family. Yeah. Which we've got some. We've seen a few other companies that we follow working with the Shen family. Maybe tell us how that came about and how it's working so far to work with a group that clearly has been successful in the software space.
Yeah, we're big fans of the Shens. Francis Shen. I knew Francis back in the late 1990s, early 2000s. We had an opportunity to work together, and then we became reacquainted here with this opportunity, and we were introduced by some of our reintroduced by some of our existing shareholders, and managed to reconnect fairly quickly there. You mentioned they bring a ton of experience to the table, especially in the software industry, software as a service industry. And Francis has a long history of dealing with small cap markets. When I first met them, he was running a company called Astra, and I think they were trading at 20 cents on the TSX Venture Exchange at the time. And he managed to take it up to the big board and did extraordinarily well for himself. They also have a lot of experience in M&A, which we found interesting as we look forward at opportunities, maybe consolidating the market a little bit. It's something that resonated with us as we were looking to kind of identify what kind of new investors we wanted on board. So, people that shared a common vision and that certainly had the wherewithal to kind of write some of the checks was ideal. And when it came with somebody that had that level of experience, it was clearly a good fit.
And you're still a small, sort of, I'd say almost undiscovered public company. Yeah. What do you think changes that? Like, how do you get your message out, or how do you take advantage of the capital markets?
Yeah, I think part of it helps with the kinds of investors that we bring on board. So people like in our prior round of financing done in early 2020, bringing on Cormark out of Toronto, they have a stellar track record and reach. And then, Shen Capital Partners, they all help doing it. What we want to do is stick to our knitting. We want to keep growing the business. And if we continue to double and triple our sales year over year, it might take a little while, but we're on the right track. We have a 84% win rate when we're up against competitive bid scenarios, which is huge. I mean, maybe we get too cocky sometimes, but that kind of success rate really engenders a level of confidence that we've got something right in the product. And now, I'd like to be doing that going up 100 times a year or 200 times a year. Last year, in the last 12 months, we've been up in a competitive bid situation 23 times. And, we won, north of 82, 83% of that.
It's impressive. Give us a sense of what the total addressable market is for you guys. I mean, how big is this opportunity? I mean, you've got the corporate side and you've got the community side. I got to believe it's a pretty big market.
It is. And I think our decision to specialize and target the product to the small to medium-sized municipalities, typically right now we're topping out at about 250,000 as the largest communities, which is great. But the product really starts to shine for the smaller communities and the more rural ones. And as I said at the top of the segment, that's over 50% of the North American population. And a lot of the other players are out there targeting the New Yorks or Chicagos or the large urban deployments, which is a much different skill set that's required and feature set that you need on that one. So yeah, we think the market is quite large. We actually think that the enterprise opportunity for SMEs is ultimately going to be even larger and more lucrative. So we do recognize that big numbers are possible on the annualized revenue side. And when you look at a market leader like a Everbridge, so out of Boston, we beat Everbridge 12 out of 12 times in the last 12 months, which is great. Put it in perspective, you asked how big the market could be. Everbridge is doing something north of 200 million a year. Wow. And they're trading at, now people should check and see what they're trading at. The last multiple I calculated about 6 or 8 weeks ago was about 18 times trailing 12 month sales.
Wow.
Which is a huge multiple. And I'm not suggesting for a second that's where we should be at, but it gives you an idea of what the opportunity space might be.
Yeah. Now, I mean, you've got 300 communities right now. Broadly speaking, what kind of percentage of the addressable market do you think that is? Of the sort of the smaller communities, of the 50% you were talking about?
Within Canada, we're probably at about 15%. And then within the US, it's significantly less than that. You're into, we've got 9 or 10 there. So the opportunity to move up is significant.
Yeah. Gotcha. What, if any, new initiatives are you planning? I mean, you moved into the US. That's clearly a new initiative. But anything else you can think of? New products, new marketing techniques? What kind of new stuff are you guys working on?
Yeah, 2 come to mind. And they're, when we look at defining the product, we look at trying to see what elements can reach across an enterprise and a municipal kind of market sector. So, the US market slightly different, but it's still largely municipal, and so we kind of look at enterprise and the muni segment on there. One of the big ones that is a cross blend is something like lone worker support. So both enterprises and your municipalities have obligations for the care and safety of their employees. And oftentimes they're in a situation where if they have a lone employee, their office managers are tasked with phoning them up every hour and a half to check up on them. And so one of the features that we're actively working on now is around lone worker kind of operations in terms of monitoring their safety, being able to dispatch resources to do a health or safety check if they fail to check in, that sort of thing. And there are other solutions out there. They tend to be related with more specialized equipment, oil and gas kinds of things. Right. This is a slightly different take on it at that one. The other vector that we're seeing that tends a little bit more towards the I guess we'll say the municipal side is we're getting a lot of interest for supporting tourism and buy local kind of campaign opportunities. So areas where smaller municipalities or regional districts can kind of promote opportunities that would be different. So for example, if you were a tourist moving into Tofino for a couple of weeks, you want the app because, you're at risk of tsunami alerts and what have you, but you're probably less interested in the garbage pickup cycle, and you're more interested in any discount offers that might be there for a whale watching tour, or taking, surfing lessons or boogie boarding. So they've been, we've been very much engaged with our communities around developing or extending opportunities into that space.
Makes sense. So, I mean, the newly sort of received money that you guys got, what are you going to use that money for?
Sales and marketing expansion. On that one, that's where we need it. That's where we want to do it. We have the US market. We have some big initiatives going into more digital marketing, digital advertisement. We recognize that the way people buy in the municipal space is going to be very different from the way they respond to and buy in an enterprise space. Our primary vector in the municipal space, it's a little bit more of an old school kind of a marketing piece. So a lot of direct outreach. And most of our deals nowadays are coming in as referrals. So almost 60% of our new deal opportunities that are coming in are on a referral basis, which is tremendous. It really helps our cost of acquisition come down. And okay, we have to make a big investment every time we move to a new region. But once we've got that kernel, that nucleus there, it just kind of organically can grow and foster on its own. In the enterprise space, we think that's a little bit different. We think the IT organizations are more searching more actively. We think it's much more of your traditional digital marketing campaigns that we need to be fostering.
And when you get a new customer, how much customization work is there, or is it pretty boilerplate?
We do marketing collateral customization for them to facilitate launch, but we're talking about a couple of days. Then we offer extensive training, and that first year, the training, we go overboard with it. We really want them to make sure that they understand the system, that they're comfortable in using it. Our belief here is that the more they use it, the more likely they are to, re-up come subscription renewal time. We think we're doing it right because we're, like, as I mentioned, we're at 100% renewal rate in terms of what we got captured. Some people could read into that we're not charging enough, which may in fact be the case. But long term, we think this investment in training really pays off and pays dividends down the road.
So part of the reason for that question is just to understand, like, if you guys all of a sudden were, if your sales and marketing approach works out real well, you get 100 new communities that want to come on board, how, is there a bottleneck on sort of the back end in delivering the product and service to a community, or can you scale that?
No, I think it's fairly scalable. And, put things in perspective, a training session usually lasts about 90 minutes.
Oh, okay.
So it's not like a 3-day training environment course that we have to run. It's done online, typically 90 minutes. We might do a refresher course 3 or 4 times a year kind of thing with them. But it's there's a material cost there, but it's not non-scalable in terms of what we do. We can also partner with other providers to do that, and we've been reaching out and looking at that recently as well.
So it's sort of, back to what you said earlier, you think that Breakeven is about 400 to 450 communities. You're at roughly 300. You expect to be around 320 by the end of the year. Can you add 100 new communities in 2022? Yeah,
absolutely. I mean, we're adding in 2021 here, we will have added probably about 120 communities.
Okay.
On that one. So yeah, we're actually expecting to add a little bit more than that in 2022.
So clear visibility to profitability based on sort of the current run rate.
Yeah, we certainly see the path forward to it in terms of where that is and what we're seeing.
Okay, fantastic. Brian, where do you see this business in 5 years?
Hopefully we're 10 million ARR. I don't think we'll have, or north of that, right? I would have liked to have, and that would have been if we stayed on the organic track. As I alluded to earlier, I think there's opportunity for smaller M&A as we look at consolidating different opportunities. When 9/11 hit in the US, I think it generated a bunch of mass notification solutions that were out there. They're still out there, but they're typically old school technology. We have a history of being able to beat these guys and then import their data sets. So I think there's an opportunity there to be pretty selective on picking up some opportunities there should we elect to go after them and find the right match. So I'd like to see us have a couple of acquisition events out there that would help us accelerate that, annual recurring revenue growth.
That's good. It's always nice to see, the opportunity to grow organically and an M&A opportunity to grow as well. Refresh my memory. What kind of margins do you get on the Buoyant product?
So with the Buoyant product in that first year, the cost of acquisition is higher that first year. And so we're basically, break even, kind of maybe 5 or 10% margin on the positive side. As we move into years 2 and 3, the training requirements drop. They're already acquired. Our biggest expense then is the channel that they're delivering on, and that can vary based on the demographics. So as an example, it's very, very inexpensive for us to send out alerts to a mobile app. But if we're into a community where they're requiring, maybe it's an older demographic and the residents are more comfortable receiving text messages or voice calls, that there's a greater expense there. But in general, we certainly see this moving up. If we were to look at one of the metrics we track is our cost of acquisition related to our long-term value. So our CAGR versus our LTV, that's sitting at about 3 to 1, a little bit north of that, maybe 3.4, 3.5 on that. So, suggesting that we probably have a little bit of room where we can still bump up some of our marketing expenses, but in general, it's moving in the right direction.
I've got a question in from one of the listeners regarding school districts. Do you guys sell to school districts, or is that typically part of the community service?
It depends on where we are across Canada, to be honest. In BC, the school districts tend to run more independent of the regional districts. So BC and Saskatchewan, they tend to have their own solutions. We've not specifically gone after the school districts in terms of where it's been, just because sometimes there's a little bit more back-end infrastructure required in terms of integrating with their systems. We have other provinces where the school districts are under the umbrella of the municipalities, and then we do certainly sell and cover to those. So again, it depends on the geography.
Brian, we're about to wrap up here. Just a couple more questions, and one, from an investor, sort of watching the company right now, what sort of metrics or catalysts or events should we really be watching out for to really be able to measure how successful you guys are, growing the business?
So what we want to see is we want to see what our annual recurring revenue is, and making sure that that's growing at a significant rate. So in an ideal world, you should be seeing us double or triple our ARR on an annualized basis. We're certainly on track for doing that this year, but you want to see us doing that again and again. So as we report with our quarterly financials, what our annual recurring revenue is, that's a big one. Our dollars per resident number we think is really important, because we think that's how many dollars are we going to recover. And we see that number going up as we add more and more features to the product. So I talked about the lone worker as an example. So as we overlay that capability onto these opportunities, that should bump up our dollar recovery per resident, another 10, 15 cents per resident kind of thing as we go forward. So seeing those two numbers really starting to track up, I think are big. More specifically, you want to see us continuing to grow the US, and you want to see our enterprise presence growing. And, it's still early days yet. So, in our case, seeing us go from 10 to 40 deals in the US will be nice, but that's not kind of the curve that we want to be on. It should be much higher.
Much bigger. Yeah. Fantastic. Listen, this has been great, but Brian, is there any other sort of key message or key takeaway you want all our listeners to walk away with today?
SaaS companies are valued high because of their recurring revenue stream, and deal acquisition is important, and that's good. I think the thing to watch is we got 100% retention. We are in an incredibly sticky SaaS environment right now. And even though we're still young, I think that presence is working. Our competitive win rate, is outstanding. That 80% plus number, and our ability to convert at 66. I mean, I think we're just seeing the start of the curve in terms of where we have to go with this. So it's exciting times.
Early days and a lot more to come.
Yeah, so long as we have a little bit quieter summer season.
Less fires.
Less fires. You don't want to wish fires on anybody.
I know.
Certainly an upside there. But it was a little chaotic this summer for sure.
For sure. Listen, Brian, this has been great. If anybody wants more information on ICEsoft Technologies, what's your website address?
Sure. www.icesoft.com. And the product website is Buoyant, VOYENT -alert.com.
Fantastic. It's been great. We've been speaking to Brian McKinney, CEO of ICEsoft Technologies. Brian, thank you for joining us today, and we certainly look forward to catching up with you in the near future.
Thank you very much, guys, for having me.
Thank you.
Bye.